Hey guys, Tony here. Welcome back. AMC reports their earnings on Wednesday, November 8th, and I thought it might be interesting to take a look at Cinemark, which just reported their Q3 earnings on Friday, November 3rd, and see what we can learn as far as a preview for AMC, and maybe do a little bit of comparison between the two. Cinemark is the third largest theater operator behind Cineworld, the one that recently went bankrupt and then got taken private, and in the number one slot, AMC. Cinemark has 5,765 screens in 507 theaters in 14 countries, mainly the United States and South America. Cinemark has a market cap of $2 billion, placing it just underneath AMC, which has a market cap of about $2.13 billion. In terms of stock performance, Cinemark is down about 66% from the pre-COVID highs of 45.68. Although for the year 2023, since January 1st, Cinemark is up 76%. Before we get to the end of this video, we're going to look at my green, yellow, red dashboard for Cinemark and maybe compare it to AMC. Remember, that dashboard is my own personal risk assessment for retail investors of holding this stock, looking at key financial ratios. But before we do that, let's talk about Cinemark's earnings reported on Friday, blowing away expectations from analysts on Wall Street. Analysts had been expecting Cinemark to report 41 cents per share, and they came in at a positive 61 cents per share EPS. For AMC in the upcoming earnings on Wednesday, the analyst estimate is negative 27 cents. I did a video for you guys about a month ago with my own estimate. I think that I said negative 17 cents. I'm hoping that AMC will repeat what Cinemark did and blow away these analyst estimates. Would a Q3 upside surprise for AMC be enough to get it into positive earnings territory? I don't think so, but we will find out together in just 2 days. Let's take a look at some of the highlights of the financial statements for Cinemark that they released on Friday. On the income statement, we have revenue slightly down from the previous quarter, dropping from $942 million to $874 million, although that is a 34.5% increase from the same quarter a year ago. Looking at the chart with the overall trend of top line revenue, you can see that they are doing very well, meeting or exceeding 2018 and 2019 revenue levels. Operating income for Cinemark came in at $145 million, again slightly down from the previous quarter, but up from a year ago, and that gives them 2 quarters in a row now with positive operating income over $140 million. Same situation with net income after we take out interest payment and taxes. Cinemark's free cash flow for Q3 came in at $56.8 million. Looking at a couple of ratios, that gives them gross margin levels 39%, operating margins 16%, and profit margin of 10.3%. for Q3. On the balance sheet, they increased their cash to $805 million from $758 million the previous quarter. When we look at total current assets, just over $1 billion versus total current liabilities, $651. This is what you want to see when you're analyzing a company, that total current liabilities is less than total current assets. That gets to what we call the current ratio or working capital. It shows here that the long-term debt for Cinemark is $3.3 billion. The portion that is actually debt, not counting lease liabilities, is $2.3 billion for Cinemark. So they do have a substantial amount of debt on the balance sheet. And that is one of the things that management focused on their call, which was well over an hour long. I always recommend that you guys read through the financial statements and listen to management's earnings calls so you can get an understanding of what their strategic objectives are. And fixing the balance sheet is one of those objectives for Cinemark, just like it is for AMC. In terms of the cash flow statement, you can see here operating cash flow $91.9 million for the quarter, investing cash flow negative $20 million, capital expenditures was up to $35 million, where it had been around 26, 24, 28 in previous quarters, and financing cash flow after paying off some debt, negative $7.2 million. That gave them for the quarter a net positive cash flow of $55.1 million. Cinemark's loyalty program, their movie club, has seen an increase of 25% from 2019, now exceeding 1.2 million members. But when you compare that to something like AMC and their Stubs program having over 30 million members, that kind of puts this number in perspective. Looking at attendance for Cinemark for Q3, 62 million patrons, up from 48 million the same quarter a year ago. Adjusted EBITDA, as we said earlier, 197 million. Free cash flow, 50 million, and ending cash balance, $806 million. When we look at their slide for capital structure and allocation, you can see they have 2.4 billion here of long-term debt, minus the cash balance of $806 million, giving them a net debt of just over $1.6 billion. We'll get an update on AMC in just a couple days, but as you know, AMC's long-term debt is considerably higher and their cash balance is considerably lower. So the net debt that AMC is carrying at the moment is a little bit higher than Cinemark, but AMC is twice the size of Cinemark. Cinemark had run up prior to earnings, as stocks often do, from $15.11 up to a high of $17.42 on the 3rd, although it did take a tumble this morning. And I was looking at some other theater companies. IMAX had a similar tumble this morning. AMC was mostly immune from that, maybe in anticipation of beating earnings on Wednesday. We will have to see. The only thing that I could really find that maybe explained why the theaters were under pressure today was that SAG-AFTRA put out a notice on Twitter and press release that they still have not come to a deal on the actors' strike. And we were told over the past couple weeks or so, if they didn't get a deal done this weekend, that it was going to be 2024 before they resumed negotiations. Now, I'm still going to keep my fingers crossed that we don't have to wait that long, but this is disappointing news overall for the entire industry. On the earnings call, analysts did have a lot of questions for the Cinemark CEO about the actors and writers' strike, trying to think out, plan out how that is going to impact earnings and revenue over the next 1 to 2 years. And it will have an impact. So that is something that Wall Street is looking at as they decide what sort of recommendations they're going to put on this stock and what sort of earnings will derive a share price for various movie companies. All right, let's take a look at the green, yellow, red dashboard for Cinemark. And just remember, if you've been here before, you already know this. If you're new, this is my pictorial representation to you of the risk of investing in a company like Cinemark. We use the same basic rules for any stock, and depending on what the results are, it turns a box green, yellow, or red. In the case of Cinemark, they get a green for profitability. They get a green for earnings momentum. On return on equity, it is a red box because it is negative, but on the bright side, at least they do have positive shareholders' equity on the balance sheet. But since the return on equity is negative, they get a red for that box. Cash position, they have adequate cash, especially if they continue to book positive earnings on future quarters. Debt to equity ratio is a problem for Cinemark. 11.04 gets them a yellow. Current ratio, or working capital, the ability of the company to pay its bills over the next 12 months. Looking on the balance sheet at current assets versus current liabilities for Cinemark, it is a green with a current ratio of 1.55. Revenue growth rate, bottom left-hand box. 1 year revenue growth rate is 34%, quarter over quarter from a year ago. So that is a green. Dilution risk, I gave them a medium. This one is a little bit subjective. Cinemark does have some convertible bonds, which is in the back of my mind. And I know that they do have over $2 billion in debt that they want to tackle. So dilution could be something in the future that investors need to be thinking about. CEO and management is another sort of subjective coloration of the box. Is management communicating their plans, and are they executing against those plans? Short interest is red boxed for Cinemark because it is very high, over 21%. Dividends, they talked today, they got questions today anyways about when are they going to restart a dividend. They said that they might do a dividend again in the future. It's something that they look at depending on what their free cash flow looks like in upcoming quarters or upcoming years. Yellow is not really a penalty. It just means that they're not currently paying a dividend. And as far as insider trades, there are no records that I could find recently of massive insider selling in Cinemark by the executives, so they get a green box for that. I'm going to put the dashboard for AMC up here just so you can look at it as a comparison. You can see that there is a lot more red and yellow on the AMC dashboard than Cinemark, and most of that has to do with the fact that AMC needs to raise cash. They're upside down on the balance sheet. The cash also affects things like the working capital, the current ratio. So there are things that management has communicated to investors that they are actively, strategically working on to improve the balance sheet, to fix the balance sheet by raising cash, and that will flip many of these boxes from red or yellow to green over time. The other thing that AMC needs, being twice the size of a company like Cinemark, is they need movie revenues, box office revenues, to be much higher to be profitable. So we will be watching that into 2024 and 2025 and praying for a quick resolution to the actors' strike so that these production houses can get movies out and support the various movie theater companies that are relying on Hollywood to get the movies into the theaters. Once the industry is back up around $11 billion, AMC can fix many of the other boxes on this dashboard related to profitability. But I don't want to dwell too much on the AMC dashboard in this video. We will go over that and refresh it after we get the Q3 earnings on Wednesday, November 8th. Hopefully you found this little bit of information about Cinemark's earnings for Q3 helpful, and hopefully it gives you an idea of what we can expect for AMC on Wednesday, November 8th. Leave me a comment down below if you have questions. Hit the subscribe button if you are new here. Thank you for watching. I am Tony DeNaro, and I will see ya on the next video.